This conference will now be recorded.
Number 2, technical analysis. In this section, we're going to be looking at charts. And in this slide, you can see we're going to be looking at the candlestick chart. Many traders prefer candlestick charts because they are visually appealing and provide substantial information in a small amount of space. If investors can successfully use them to interpret market sentiment, they will have one more tool that they can use to determine whether to enter or exit a trade. Take a look here. You can see we have a blue candlestick. Now, the real body represents the difference between the closing price and the opening price. Because the color of this candlestick is blue, it means that the closing price is higher than the opening price. We also have shadows on either side of the real body, which represents the high price for the period and the low price for the period. In the next slide, we have a red candlestick. Again, the real body represents the difference between the closing price and the opening price. However, because it is red, it means that the closing price is lower than the opening price. Again, we still have the upper shadows and the lower shadows, which are indicative of the high and the low for the period. Now, what is technical analysis? Well, technical analysis is the practice of anticipating price changes of a financial instrument at any financial market as a whole by analyzing prior price changes and looking for patterns and relationships in price history. It is the art of gauging the trends, momentum, and the overall sentiment behind the price movement of a stock or any other security, helping us to make the investment decision. In technical analysis, there are hundreds of indicators that are used, compared, screened, and then applied as a part of an underlying investment strategy. However, it is interesting to note that no single indicator has ever been found to be accurate 100% of the time. Now, here are the main differences between technical and fundamental analysis. Firstly, with fundamental analysis, it's a method of forecasting the future price based on strength of business and economic factors. In technical analysis, it is a method of predicting price movements by studying charts of past market action. Fundamental analysis focuses on demand and supply, seasonal cycles, financial health, government policies, long-term goals of investors. Technical analysis focuses on price, volume, open interest, which is particular to the futures market only, and short to long-term goals of investors.